I want to welcome everyone to another episode of the Droppin Knowledge Podcast. We are back like we never left. Time flies. We are at episode 7, and today we're talking money talk with my good friend Tammy Dervin, who I've known for 20 plus years. I call her the money guru because since I've known her, she's talked about that bread. But she's going to break down some really useful tips, habits, strategies, etc. for us. Talk about a platform that she's created, and I'm super excited. So she was going to be with us last week and had an unexpected passing in her family. And so our condolences to you, but we appreciate you doing quick turnaround and getting with us because I know my people want it and it's going to help so many people. So welcome to the podcast, Tammy.
Thank you for having me, KB.
You got it. You got it. So let's start. I talked about the fact that I've known you for quite some time. We're both University of Illinois alums. That's right. So when did you actually get into the money talk? When did you really get into finance? Is that what you majored in undergrad?
Yes. So my bachelor's degree is in accountancy. That's what U of I calls it. So my bachelor's degree is in accounting, and my MBA is in finance and marketing from Loyola University here in Chicago. So I do have a financial background, but actually doing financial education was really birthed out of my passion for financial literacy. On my journey in my actual day-to-day job career, I saw the need for just basic financial information and how to manage money. So I was like, I want to create something and help educate people on the do's and the don'ts. So I created Money Basics.
So talk about that a bit. Was there any specific thing that happened that made you kind of create the Money Basics online platform? Was it what you were seeing every day, and what were you seeing?
So in my everyday job, I'm an auditor for a financial regulatory agency. I'm saying that for a reason, because I can't represent them on different platforms, but I work for a financial regulatory agency. So we see a lot of fraud that happens. Also, prior to that, I worked for Freddie Mac. And Freddie Mac is an investor in mortgages. So I saw how, looking at mortgages, doing those type of examinations and audits, looking at the differences between people who knew how to manage their money and manage their lives well, what they were paying for their mortgages, and what people that didn't manage their lives well were paying for mortgages. I also saw, when people got into trouble and them not understanding, knowing what to do as it related to their mortgage. Based on where I work now, I see a lot of people get taken advantage of with their money as it relates to investments, getting taken advantage of in different schemes and scams, and they lose a lot of money. And so I was really torn, like, okay, we got to do better. And honestly, I saw it more in our community of people not knowing and not having the information on what to do with just the basics of it. I'm not talking about, the high level investments. I'm talking about basics with budgeting, saving, basic investing that we weren't doing. And so I decided I wanted to create a platform just to help people with the basics of managing their money.
Got it. So I know you have your platform and business that you created, which is Money Basics Online. Kind of talk about that a bit. So if folks tap into that platform, what are they getting? What are you doing for them?
So one of the biggest things that I talk about, and I start with my coaching clients, or even in my workshops, and people know me that follow me know this, is the biggest thing that I talk about is managing your money. And what that equates to is budgeting. People don't like to talk about budgeting, but budgeting is a basic life skill. And most people that make money don't budget their money. And that's why a lot of times we hear people talking about securing the bag, but they secure the bag, but the bag goes away. They secure it and they spend it. And then 2-3 years from the time that they got it, they have nothing to show for it but and I hate to say this, but the clothes on their back,
Mm-hmm.
on their feet, their purses, a car, but you don't have money in the bank. You don't have cash in the bank. You don't have investments. So those things, those practical things, start with really budgeting your money based on what you make. So with money basics, the foundational thing that you're going to get is learning how to budget your money for the things that you need to do in life and you also want to do in life, because there's a difference between taking care of your needs and also taking care of your wants. So one of the initial things that I definitely talk about is budgeting. And the biggest thing for the last couple of years that I've been pushing, that I saw that there was a lack of, is people creating goals and financial goals. So sometimes, with that budgeting, it's hard to do it every month if you don't have a reason why you're doing it every month. So I really started working with people on creating concrete, achievable, trackable, measurable financial goals. So it pushes them to do that budget every month.
So I'm listening, Tammy, right? And there's a certain type of individual, right, that they may even run their personal life like a business, right? So they're all over their numbers, they're with spreadsheets, et cetera. But then you have a huge population that it's just not really a skill of theirs. They want to secure the bag, they want money, but it's not really a desire. I know over the years, specifically as the mobile app market has grown, et cetera, you have all of these different tools. Is it as simple as just getting one of those tools? People doing a deeper dive, kind of talk about just what's out there and what you recommend is kind of the best practice.
Yeah, thanks for asking that. That's a great question. One of the things that I always tell people is personal finance. That's what they call it, personal finance. It's personal, and it's personal for a reason. Not just that, how, back in the day and even now, people don't really like to talk about money. Absolutely. They don't like to talk about how much they make. They don't like to talk about how much they have. It's like a secret thing. So it's that word personal is the reason, but it's also personal because the basics are the same, but how you go about doing it and maneuvering it can be different for everybody. So you have to go off of what your behaviors are, what your normal patterns are. So if you are an app person and you gravitate to using apps all the time, then yes, use an app. But I also tell people, if you're a person that's more of a journaler and you are a pen and paper person, use pen and paper. Get a little journal book. They have them at Target, $1. If you are a person that likes Excel spreadsheets, you mentioned that. Excel spreadsheets. I do provide those with my workbook for some of my clients if they do that. But I also talk about apps. So there are some great apps out there. Mint.com, mint.com. It's free, but they also have a paid version. Everydollar.com is a great app, and all of these have a web version and a mobile version. So everydollar.com is also a free app, and they have a paid version. And of course, when I say paid version, there's some upgraded features that they offer you. There's also another platform that is a fully paid platform. It's called You Need a Budget.com. And that's another great platform. However, it's a paid one, but they do have a free trial. So when I work with people, I really tell them, let's try a couple of different things to see what works for you, because what works for one person may not work for another. So it's the important thing is to try and do what works best for you, because we want you to make this habitual. This is a good habit to develop. And it's actually a must. Like if you want to have money, you need to manage your money well, and budgeting is the foundation of that.
Got it. Okay, very good. You gave us some great tools. I was aware of Mint, but I wasn't aware of the others. So hopefully folks are taking this information in, jotting down some notes.
And with all the apps, they're really easy. I mean, people think that voila, It's just going to manage it. No,
Right.
there's a little work. You got to do some input. You got to put in your accounts. I'm just giving the disclaimers.
Yeah.
You sync them to your bank accounts or things that you use, and then depending upon how you use your money. So if you're a person that spends cash and don't swipe, then you might have to do some manual entries. But if you're a swiper, which we're going to swipe being responsible, then it'll automatically categorize those expenses for you. But I will give the caveat with a lot of the apps, and even in your people, I would suggest that people actually, when they look at their bank accounts, depending upon what their financial institution is, a lot of them have started creating those spending trackers
Right.
and categories.
Right.
But the only thing is you may have to manually change some of them because sometimes they can't read what the purchase was and what it should be categorized as. So there's maybe a little work to do, but it helps you.
Right.
It's a tool to help you do the budget and also track your spending, which tracking your spending is another key component to the money management process and the budgeting process. So those apps help you to do that. And then also now the financial institutions have started to get into that game of helping people track their expenses and knowing what they spent their money on each month.
Got it. So you said something when you started to answer the question about, and I don't know, maybe it's in all communities, right? But you talked about, we don't talk about money, right? And I think that's very true, right? I'm in the credit industry, right? In credit restoration industry. And I can't tell you how many times people, ask, how's your credit? Well, I mean, it's not that bad. I mean, like, what's your score? Like,
well, they haven't looked
like low fives, people are, because it's embarrassing. Is that a drawback to our community? Do you think that, in your opinion, does that hurt us, that the fact that we don't talk about money, given how important money actually is?
Yeah, I think it is something that has hurt us. And I think what that derives from is shame. People feel they feel shame about maybe financial mistakes that they've made in the past. But what they don't understand is all of us in life, even myself included, have made financial mistakes in the past. That also played a role in me wanting to do this, because whatever mistakes that I made in the past, I don't want others to make those same mistakes. So I'm here to help you not make those same mistakes. So when I come into a workshop, even my coaching client sessions, I always tell people this is a safe space. So my job, no matter how much debt you have, what you don't have or what you haven't done, my goal is no judgment. It's a safe place. Even when I do the workshops, I always, the first thing I tell people is the one rule in my workshop is whatever is said in the workshop stays in the workshop, except for the good information. That's what I always say. Except for the good nuggets, you need to share those. But when people ask questions, they don't want to feel judged, and they don't want to feel like their business is going to be shared. So I love to create a safe space, because that's the only way that I can help you, is when you fully communicate everything that's going on and you don't feel that judgment, which leads to feeling shame. So I think that's why a lot of people haven't talked about money. It seems like we share other things as it relates to money, or how to just, make money quick, but we don't share really those foundational things of how to really manage it, or how to get out of, bad places that we are with money, so that, we can get to that next level with our finances.
So your response caught my ear. You talked about making money fast. And so I know that, right now during these times, I've been approached by a number of people about these susus, right? Or gifting trees, or whatever it's being called. And so I've looked up the history, and you see that it has some real good foundational things that are happening. But of course, it's exploded during the pandemic. You being kind of a money guru, what are your thoughts about susus? Do they work? Should people do them? Should people not do them? Interested in hearing from you about that.
Thanks, KB, for asking that question. Okay, so this is what I will say. Couple things. with the susus, like you said, there is a history to the actual susu. So it's interesting that this, I don't know what to call it. I'm just gonna be me on your.
Yeah, please.
Okay, you all gonna get Buddy Basics today. That scheme right now, they've really taken something that was pure, that was actually derived in like the African areas, the Caribbean areas, that was just basically a savings club to help people save money within their community to do different projects. With the original intent of a susu, it was actually not a get rich quick thing. The original susu was just whatever you put in 1 month, then the next person put in 1 month. So we only got in you only got out what you put in. So it was a simple thing. Now it's put in 100, you're going to get 5,000 back or whatever. But I will tell you a couple things that I've told people, even with the susu, you have to be careful who you give your money to or invest your money with. Because if you just give somebody your money, you have no protection. Okay, you have no protection. So first off, you giving your money to some pool, you don't know the credibility, the character of whoever the person is at the end of the day. Because if, let's say, they get into a spot and they got to pay something and they take the susu money and go do, what you gonna do? You can't. In reality, and it's interesting that they called it gifting. They're doing that because it's a trick, so that they're trying to get, they know rules and regulations. So they're trying to get away from you saying, no, I invested that money. No, you gave it to somebody. That's just like if I say I gave you something and I put in the memo line, I gave it to you. There's no recourse. You gave that money to me, but you're like, no, that wasn't the intent. I was trying to do, no. That's why they use that word gifting, so that if anything happened, there will be no recourse as it related to that. And recently, I posted an article, and it's actually on my Money Basics Facebook page, that the Illinois Attorney General has been getting a lot of complaints about people losing money in that scheme. And he clearly says in the article that this is illegal. He says it's illegal. So people that are holding this money should not be holding this money. You're not a financial institution. You're not a bank. So you should not be even holding this money in this type of thing. It's not legalized gambling, because it's almost kind of like gambling, because you're hoping that you're going to be the next number to come up to get the money or whatever. So you haven't registered with the state as a casino or anything like that. So you're not following rules and regulations. So I would really highly caution people, first of all, that are participating in this and that are being pulled into this to even administer and take funds in this manner, because you could be legally held liable for taking people's money, especially if they don't, I don't want to say hit or get the, I don't know what they call it.
Payout.
It's your term, your payout, whatever.
Right.
So be careful. And I really want people to see, typically, and you've been to my church. So I interact with a lot of people of diverse cultures. I find it really interesting. And it really sometimes breaks my heart that a lot of things really only flows through our community. Right. A lot of stuff does not flow through the other communities. They don't even get wrapped up to this. What they're doing is they're investing their money through a reputable financial institution, a bank. They're investing with a brokerage house. Like that's because that's where your money is protected.
Right.
Now it's protected when you reinvest with a financial institution, because it's backed by the government up to $250,000. When you invest through a reputable brokerage house, like even with investments, you have to be careful. So I tell people to always check their investment advisor and also check whatever investment company that they're using and make sure they don't have any complaints, because we get a lot of people, especially during this pandemic and when people are hurting, we get a lot of people that are preying on people's vulnerabilities as it relates to money and their need and their desperation for money. And they come after us because they know that we have this desperation, we have this need to make money quick. And so they create these schemes and scams and get people involved, and it grows. So I just tell people to really be careful. I've gotten not necessarily approached to join because people know me, but I've gotten several clients and friends that I'm there like consigliere.
Yeah.
Okay, what do you think about this? And so the basics of what I told them is, listen, I would tell you to invest or save your money at a financial institution that's backed by the federal government. I would tell you to invest your money with a brokerage house that is backed by the federal government and that does not have negative complaints against them, so that your money is secure. You know, when you put it in, they have to legally give it to you, or you can file a complaint with the federal government.
Wow. That was good. That was good. I mean, it's no secret, you know, I told you that I was going to bring it up, right? Because it is running rampant in the community. And I've seen all types of different stories, people being paid out, people not being paid out. So if I play devil's advocate, Tammy, but so you're talking about brokerage houses and investing and et cetera, there's an entire population that even that sort of language is over our head.
Yeah, you're right.
And so this, how does, and it's not, I mean, it's just a thought, right? Because I know you don't have the answer, but how do we bring it down a little bit, right? So that sometimes the us's of the world that may be college educated, et cetera, that may be a little bit more familiar in those spaces, and oftentimes we're not either. But how do we make this very plain, Jane? Because you're talking about basics like budgeting and things like that, and college educated people, I'm not the best at budgeting. How do we break it down to its lowest common denominator so more people can get it and leverage it?
Okay, let me just say this. So budgeting is not hard, okay? And it's not even, you don't need a college education. So really budgeting is basically you writing down what you make, and you can put it on a piece of paper. I make $2,000, okay?
Okay.
And you write down your expenses, and then you add up all your expenses, and then you just need to make sure that your expenses do not exceed what you make. It's simple addition.
Got it. So
that's all budgeting is. It's really not. It's really not. It's really basic. And I tell people that I said the finance budgeting principle number one is to spend less than you make, or if you want to say it more positively, make more than you spend. But the only work that you have to do is input the numbers. And even if you're not a numbers per se person, it's just simple math. But we have to want to do it. So I think sometimes people even want to know that we're spending more than we make. So we make the excuse that I don't understand numbers. No, you want to understand numbers. You understand numbers. And so that the basics of budgeting is really simple. It's you put down your income and you put down all your expenses. And the only thing you need to do is make sure when you subtract that number from your income, you don't need to have a negative number. It needs to be positive. Okay, so that's the simple thing. But I will say this, and you had a good podcast, I think a couple episodes ago with a man about investing. So people probably should go back and watch that, because I felt like he gave a simplistic explanation about investing and the different investment product types. But there are a lot of apps. You know, we're app driven culture now. There are a lot of apps that have been created and companies that have come online, like Robinhood and Stash, that try to make it really easy for people to just start investing in stock.
Right.
And I think he said this, you know, but people just invest in stock and companies that they know. I always tell people, don't be just a consumer, be an owner. Like, why are we consuming all these products and we have no ownership? So if you buy Apple, every phone that it comes out, and you pay, and that's what I said on one of my podcasts, if you pay $1,000 for a phone every time Apple comes out, and you don't have at least $1,000 worth of Apple stock, that's a problem. Because you can say, I can't afford it. Yes, you can, because you bought an Apple phone. Not just one, you bought several Apple phones that cost $1,000. So I'm not an Apple user because I'm like, they cost too much. But But I'm saying that's simplistic. But if you reframe your mind, a lot of times we have to reframe our
Right.
mindset of how we value our money and how we think about managing our money. Because if you break it down like that, you say, "Well, I guess you're right. I could afford $1,000 worth of Apple stock, and
Right.
even now it's split. So now it's even more affordable to get more shares of
Yep.
the Apple stock." But that's a simplistic way. So sometimes we say it's not simple, but if you
Right.
break it down like that, and there are a lot of apps that are allowing people to invest a little bit, $25. I always tell people, whether it's saving money, start where you are. If it's $25 that you can save every paycheck, just start. Just get in the habit. So
Right.
budgeting, saving, investing, make it a regular financial habit. Make it a regular financial habit, because those are things that you really do need in life. And I can share that, but that was a simple, my short answer to that original question about breaking it down as far as budgeting is concerned.
Yeah. And you're right. I mean, and again, so I don't know if it's a not knowing how to budget. Like you said, that's pretty simple. I guess it probably breaks down to the discipline of doing it.
Yes, that's what I'm saying. You
Yeah.
have to be committed and you have to be disciplined. And the thing is, sometimes you have to tell yourself no on certain things so that you can get to those financial goals. So that's why in the beginning I said it's really important to maybe carve out and write down those financial goals, because when you are presented with opportunities, I'm calling them
Hmm.
invitations, you can say, okay, let me check my budget to see if that works. And then you say, okay, if I do this and it's not in my budget, what am I giving up? Well, you're giving up that you wrote a goal that you want to save $5,000 by the end of the year. Because if you take out of that savings bucket for this invitation to hang out or do dinner, you're not reaching that goal. And sometimes we make different decisions when we actually have concrete goals in
Right.
place that we want to do.
Right. Right. So are there any tips, for somebody, because discipline is something that's
Mhm.
not easy to create, right? And so do you have tips in terms of, hey, when you get paid, make sure X percentage goes here, X
Yeah.
percentage goes there, so people are not even touching it, but it's going to where it needs to?
Yes. So with saving and investing, my key thing that I tell people to do is automate, 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 automate. And I also encourage people, as it relates to saving, to consider, which I always talk about from even an interest rate perspective, is online banks. Because sometimes when we see the money
Yeah.
rising, then we like, well, I got an extra this in this savings account. But when you don't see it every day, then that money just grows and grows. And before you know it, you're like, oh, I forgot I even had that money. So I do tell people their real savings account, separate that from I call it the operational account. So your operational checking account, your operational savings account. Those are the accounts that you pay your bills with, do your regular activity. But like your account that you're really saving in for like emergencies, and I'm
Right.
gonna say what that is put that like in an online bank, or like credit unions. Although credit unions don't give the best interest rates, credit unions are not easy to get to your money. So then you're
Right.
not just going to the ATM. They're not like 50 branches around
Right.
the city. So automate and basically hide your money. Hide your money so that you can save it. And when you're saving for things like emergencies, think about having at least, especially in times like this, having 6 to 8 months of your expenses put away. And the best way to do that is, for those people that have regular income coming in, like from an employer, and they allow you to break up your check every month to go to different accounts, create your budget. Say, okay, how much can I save per month? If it's $200 per check, have your employer automatically send that $200 to that savings account automatically. You won't even miss it.
Right.
You won't even miss it. And I do also tell people, an easy way, let's say you feel like, okay, well, Tamara, I'm kind of tight with my money right now. I can't do that. Well, if you get an increase, if you get a raise on your job, as soon as you get that raise, don't take it. Look at what your goals are. If your goal is to increase your emergency savings or save for a major purchase, or if your goal is to increase your retirement savings, use that raise to actually funnel to feed that financial goal. So let's say your raise computes to $200 extra on your check.
Right.
Take that $200, put it to a savings, or increase your retirement money automatically so that you don't even see it, because I promise you won't even miss it.
Got it. Okay. That's
the way to do it without wrecking your budget. If you say, okay, right now it's tight, but do it. And the thing about it is you got to do it as soon as you get the raise, because if you start getting that raise in your budget, in your pocket, you get used to it and you won't take that step to do it.
Got it. That's good. That's good info. So again, for everyone who's joining us, we appreciate your support as always. Make sure that you're checking us out and follow us on our Facebook page, Droppin Knowledge Podcast. Hit us up on IG as well, Droppin Knowledge Podcast, as well as YouTube, Droppin Knowledge Podcast. Tammy talked about the episode we did on building wealth in the market with Minute Will Montez. Great episode, but we have 14, 15 maybe episodes out there of just straight gems. And so make sure you check that out. Continue to educate yourself, educate people around you. And there's a lot of information that will help your young adults. If you have teenagers, etc., definitely great info to get them on the road. So Tam, you talked about having maybe like 6 to 8 months of savings put away. Is there a time, right? Because I've gotten to the point that, is there a time where, because I don't really want to put any more money in my savings, right? They should, because I'm figuring at the end of the day, even if I'm at a high yield savings account, maybe I'm getting 2%, right? I want maybe what the market.
Well, no, right now it's bad. It's not 2%. I'll be honest. Right now it's less than 1%. And that's because the federal funds rate is low. And that's when they say the federal funds rate is 0, it's a good thing for debt holders, but it's a bad thing for savers. So if you have debt or you want to get a mortgage, it's a good thing. But if you're saving, it's a bad thing. But go ahead with it. I think I know what you're going to ask me, but go ahead.
Well, yeah, just as I've become a bit more educated around financial and really trying to secure not just the bag, but create a legacy, et cetera. You want to put your money in places where it's going, at least if you're aggressive, right, where it's going to grow more. I'm less concerned about being under my mattress, and I want it to grow. As you talk,
we don't want the money under the mattress.
Yeah, that's back
because it's not safe. Because if somebody come to your house and take it, then you don't have it. At least if it's in the bank, they can't take it. But go ahead.
That's right. So is there a point where you are telling folks, hey, stop? Some people will leave it in their checking account. Are you kind of helping individuals to say, hey, this is where you should be parking it at some point? Kind of just talk about that in terms of, as somebody's looking to kind of set things up and set their life up financially, what sort of advice are you giving them as far as that?
So basically it's building blocks. So like when I talk about the budget, so the basic of your financial house is your budget. Okay. That's like the basic. And then you start to build. And so the building blocks are your emergency savings. That's the first building block. So that's basically your cushion. You need that cushion for when life happens, because life will happen and you will need money. If anybody is watching, you should know, based on this time and season that we're in, that life happens and you just never know when it's going to happen to you. So have that 6 to 8 months of emergency savings in a liquid savings account. And I say that because sometimes people get antsy, especially when they see, let's say, 30,000 or 40,000 sitting in a savings account, or even in like a CD. I would say maybe like a 1-year CD or something like that. However, if an emergency happens and you need to liquidate those funds, so like for people that completely lost their jobs in the pandemic, they needed money to pay their mortgage, their rent, their regular bills and expenses. During the pandemic, when that emergency happened, and the market crashed, you don't have the flexibility to wait for the market to recover. So two things would have occurred. Let's say you didn't keep that 6 to 8 months in your savings account. I wouldn't say checking because checking is earning you no interest, but at least some interest on that money. You would have had to liquidate at a loss, and you created a tax event for no reason because you're actually selling your shares in whether it was a mutual fund or in stock. So if you lost money, you would have created, that would actually help you in your taxes. But if you had a gain, even if it was a small gain, let's say, then now you created a tax event. Like now you have to pay taxes on this money. It's a little different when your savings account. You just go in your savings account. You're not having a transaction. You don't have to worry about that if the price has fallen or not. It's going to be that same value and a little bit more based on the interest. So that's your first building block. Then the second building block is your retirement. Are you investing for your retirement? So people should be investing at least, and I say 15% of their income up to what the maximum is allowed for by the IRS. So right now, if you're in a 401k plan with your employer, that's $19,500. And if you're 50 and over, you can add an additional $6,500. So you can invest $26,000 pre-tax for your retirement, and you should be maxing that out. So let's say you have extra money. You're like, okay, I don't need to add to my emergency savings right now. The next thing you should be thinking about, okay, am I maxing out my retirement investing? Because people think, I don't know, we hope and pray for a long life, but we don't prepare financially to live a long life. Right. And so if that's what your dream is, to live a long life, then you should be investing for your retirement. So max out whatever retirement plan you have. And I know, KB, you reach a lot of investors and entrepreneurs. So if you're an entrepreneur, you really have to be disciplined to invest for your retirement, because at some point, you're not going to want to, or maybe you can't do whatever business that you are doing. So invest for your retirement. Get an individual retirement account, an IRA, and invest for your retirement. And those limits, if you're not within a employer sponsored plan, it's $6,000 a year that you can invest, and then $7,000 if you are 50 and over. So you see how we're building up. So the things that you need care of. So the first thing you need to take care of is your emergency savings. Then the next thing is retirement. And then if you are a parent and you have children and your dream or their dream is to go to college, you need to be investing for their college education. And I say investing, not just saving, because you need that money to multiply, and it will multiply more in the stock market. So look at a 529 plan, which is a tax advantage savings product for college. So with that product, you can save for your child's college education in mutual funds, and you get a tax break when you take the money out to pay for their eligible college expenses. So that's the next building block. And then the next thing that I tell people, okay, now we're kind of taking care of certain things that are responsible things to do with our money. Now you say, okay, I just want to invest and build wealth. And then now I'm talking about what I call the opportunity fund. So this is your fund or your money after you kind of taking care of the basics to say, okay, now I want to invest more in the stock market, but I may want to be a little bit more aggressive with my investments. So you're still investing with a broker, a brokerage house, and you're making sure that they're registered with the Securities and Exchange Commission. And I often tell people, when you're investing, go check out the Securities and Exchange Commission's website. They have a lot of information about the different types of products in the market. They also have investor alerts about different schemes and scams that are out there as it relates to investing. And that website is investor.gov. So it's a great financial education platform as it relates to investing, but it also lets you know and the things to be aware of that are in the market. So in that opportunity fund, you can invest more in the stock market, can be a little bit more aggressive than you are maybe with your retirement. And even with your retirement, you can, depend upon what age you are in saving for retirement. If you're early in your career, you probably want to be more aggressive. You want to have more stocks in your portfolio, in your mutual funds than bonds. But then you can progress as you get closer. You don't want to retirement. You don't want to be in too much of risky funds.
Right.
But in the opportunity fund, you say, okay, I want to take a risk. I want to invest in individual stocks. Or I know some people that even in their opportunity sphere, they invest in even more mutual funds. Or you may say, okay, I want to be an entrepreneur. I want to invest in a business. And
Right.
so this is your money to play with. But the whole point of the opportunity fund is to multiply your money. But you just want to do it wisely.
Boom. I'm putting this up there on the screen because I know everybody's like, whoa, right? I almost said, hold on so I can take some notes. So you all make sure, for anybody that's listening to the podcast on Apple or Spotify, any other streaming platform, the website again is www.moneybasicsonline.com, basics with an S. So make sure that you check this young woman out. She just gave you, she put your life together, right? She put your life together in about 5 minutes. So Tammy, question for you.
Mhm.
That was strong, right? That was strong in terms of the information given. It was great nuggets, but almost sometimes when I hear that, I look for simplicity, right?
Mhm.
Because I think that's where most people will grasp it, right? The game that you just gave us, how do we close the gap, right? Because financial literacy isn't really taught in school, right? I think about this when it comes to credit, right? I know so much about credit now, but 2 years prior to this, I knew it was important, and I knew you need to pay your bills on time. But outside of that, unless you go seek it, it's really not coming to you through the regular vehicles. How do we educate more people with what you just gave us?
I think the way we educate people is, think platforms like this, podcasts, because people are into listening to, watching podcasts. I think that just whatever influence platforms that you have is to, you do it, whether you have, like I do a lot of workshops for churches, organizations, incorporate financial literacy into your programs, whether it's schools, churches, non-for-profit organizations. I do workshops for those too, and just spread the word. Because I think once people sit in a class and we actually walk through a lot of these things, they're like, wow, okay, this is, simple. It's not that hard, but it's using whatever platform I believe that we have or organizations that we are part of to spread the word.
It's a great response. So are you taking clients? If somebody's watching this information like, wow, I really need her in my life. Is that something that you're still open to doing? Are you taking new clients? And if so, just tell us a little bit about what that looks like. What is the service that they would be getting if they engage with you?
So I engage with people a couple of different ways. I have individual one-on-one coaching clients, and I do it with individuals and couples. I also have something called a financial accountability program that I offer, and I break it up into 2 parts of the year. So it's a 6-month program where I walk with people monthly. So we create a plan in the beginning of the accountability program, and I basically become your financial accountability partner that we're walking through, looking at, how did you do this month? And a lot of times that's all people need. Like they need somebody to be in their ear, like actually talking to them, like, what happened this month? How did you do? Let's get back on track. Or someone to ask questions to throughout the month. Okay, this came up. What should I do about this? Or how should I maneuver this or manage this? So I'm that financial accountability partner. We create what your goals are. We make sure that you have a budget to reach those goals in the beginning. And then we walk through those things over that 6-month period. And then the third way to engage with me is if you have an organization, even like I had a group of girlfriends that wanted to do a workshop within their little group. I did a Zoom workshop for them. I can do a workshop for your group, organization, company, or whatever event that you're having. I can do a workshop.
Wow, Tammy, this has been amazing. It's been amazing.
Thanks for having me. I appreciate it. I love doing stuff like this.
Absolutely. I mean, you've shared so much information, and I think you hit on something that's truly important. That was really my goal when I started this podcast. Is I just thought that there's areas and topics that from a community perspective we just don't play in well, and
Mhm.
and our aptitude in that area is just not as high as it should be. And that was a big goal of this, is hopefully I would use my audience. And Tammy talked about sharing this, and so if you're looking at this podcast, take it, share it with your people, point people towards it. This is free game that she just gave you in 45 minutes. And my guess is if you take these practical steps, you're going to be in a much better position. So
Mhm.
thank you again. I appreciate you
Thank you for
rescheduling so
having me.
quickly. It's great to see you. Shout out to Cannon. Shout out to my noob, JD,
Yes.
my brother. And yeah, for everyone else checking out, continue to support the Droppin' Knowledge podcast. 2 more episodes this season, and then we are going to pause for a bit, change some things up, add some things, add some sponsors as we get ready to go into season 3. Make sure that you check out moneybasicsonline.com so you can get connected to Tamara Dervin. As you see, she has a bunch more information, and I know that I'm not even unleashing the beast because she only got 45 minutes, and I'm sure she has a ton more. But make sure that you go to our YouTube page, subscribe to all of our other platforms. We appreciate the support, and we are going to continue to educate the culture. Once again, Tammy, thank you, and we
Thanks
will
for
chat
having me.
soon. Peace.